Hello, everybody. Welcome to SimpliFunded.com. My name is Cherie, and welcome to the Monday night session. Y'all know I call Monday Money Monday, right? Because it's a time for us to actually talk about real estate investing and how we can use real estate in order to build wealth, not only for ourselves, but generationally as well. So I have a special guest this evening who is here talking with me. Amni Casey is in the building. Hello.
Cherie, thanks for having me. Excited to be here.
Absolutely. So, you're an author. You run a real estate investment group. You are a real estate investor. You're a dad. You're a husband. All of that stuff. Why don't you tell everybody just a little bit about yourself and how you even got into real estate?
Yeah, man, this story kind of depends on how far back you want to go. But from the investment standpoint, I'm from
Mhm.
Hawaii, so born and raised in Hawaii. Started investing in Hawaii. I currently live in on the East Coast, just outside of DC. My wife is from the area family, so we moved here maybe 14, almost 14 years ago.
Mhm.
And real estate helped us do that, right? Having the passive income and that cash flow coming in gave us options of uprooting and moving to a new part of the world, at least for me. I've been saying over 20 years for 2-3 years now, so I guess it's almost 20 plus years. And I've been everything from a wholesaler, a fix and flipper, cash flow, single family, small multifamily, larger apartment buildings. um, you know I love real estate. I've been on the brokerage side. As an
Mhm.
agent, I ran my own office for a bit. And I'm really good at, I don't know if I'm good at it. I like to retire. I like to get to an end
Mhm.
and, put that part of my life behind me, or try to, and quote unquote retire and start something new. So I've done that twice in my life. I'm in the fourth chapter of my life in the 40s, and just exited the brokerage kind of leadership position that I had, to kind of step into what's next in life. And I get to make these weird transitions and decisions. Really, it comes down to, because we've owned real estate and we decided to buy real estate that cash flows to support our lifestyle quite a while ago.
Great. So, first of all, most people are trying to get into Hawaii in order to live that excellent, beautiful life. I love Hawaii. But you left Hawaii. Why? Like, are you crazy?
Yeah, I get that. That's probably the number one question I get. I love my wife, and that's really what it comes down to. So I met her in
Uh,
Hawaii. She wasn't from Hawaii. She's from here. Her family was here. We made an attempt to bring her family out to us for a while, but ultimately, when right at the point where, when we had the freedom to move
mhm,
wherever we wanted to go, we
mhm.
had our first child on the way, and her family was moving back to Northern Virginia. That trifecta of things led to her saying, "I want to go there, follow my parents," and we did that. So we moved out here. I got into real estate in this area as well, and I love it. I love the area. Not quite like Hawaii, as you mentioned, but we do
No.
find all my family's still there. We go back often. We try to visit, and our plan is to eventually end up there at some point.
Well, that's great. Look, that's a great place to end up. So, first of all, hey, NC worker, good to see you this evening. Everybody, don't forget to like the video, follow, subscribe to the channel, whatever channels you are looking at this at. Um, the second thing is you said you retired twice already. So, I guess you said that, but you said you're starting the fourth, like, I don't know,
Chapter.
chapter, yes, of your life. So, really, did you retire three times?
So I think of my teenage years as a chapter, and no, there's no
Ah,
retirement there, right? But my
okay.
teenage years, my 20s, my 30s, my 20s, my teenage years was figuring out who was and making a lot of mistakes. My
Mhm.
20s really was about becoming financially free. I became obsessed with financial freedom at an early age and focused that in the 20s. And my goal was to be financially free by the time I was 30 through rental properties. And then my 30s, we started to have kids. We have three amazing kids. But you start to think of things other than yourself. And so this
Mhm.
concept of like generational legacy wealth was new to me. And I started to focus my businesses and my investments to align with, that goal. and then retired at just over 40. But basically every decade I try to kind of step into something new, and I'm still in that realm now. So I officially retired. I do run a education event. It's not a business. We don't, make money or charge money for it. It's more of a legacy give back thing. But I'm having a lot of fun doing it. It's called the Cashflow Breakfast Club, and went from one location. We're expanding we're almost up to, I think, 19 locations now, just in the last 4 months. And the goal is to have 50 by the end of the year, making real estate education more accessible. There's a lot of great online platforms, a lot of great places you can learn online, but we wanted a community in every major market that you can go to. All right, I learned this online, but I need to talk it through with somebody. I need someone to hold my hand, or I need to discuss this, right? I might be missing something. And that's really what's missing, especially since the pandemic. So many of the great in-person communities kind of stopped. We wanted to kind of bring it back in more of a uniform fashion, education, networking. And that's my passion. That's what I'm doing right now. Almost every single day I eat, drink, and sleep Cashflow Breakfast Club expansion.
So how do people find out about the Cashflow Breakfast Club if there's one in their area that they can go to?
Yeah, absolutely. So cashflowbreakfastclub.com is the website. We are, if you're a real estate investor, you guys follow Bigger Pockets. They have a conference at the end of the year. We're one of the major sponsors of that event. You can come there.
I think it's in October.
Yep, October in Orlando will be
Mhm.
there. And so we're excited to partner with them. So I've learned so much and got so much out of, so many people at Bigger Pockets. It's awesome to be able to collaborate with them. And really do you want to attend? Or what we do is we find investors that want to lead a location. So we actually coach and train investors that have 4, 5, 6 rental properties. Maybe they're good, but they're not like at the end of their career, and we give them the content, we give them the training to run their own location. And so that's really what we're doing, because we can't run them all. We just want to be able to give it out to as many people as possible. And it's a free model right now. We're giving it away for free to those that are committed to actually bettering their community by providing it to their community for free as well.
Yeah, so I will make 2 comments about your group. The first is I had a whole lot of fun. I've been to 2 of your meetings, and both of them were fabulous, especially the first one, because we did this we call it exercise,
Sure.
where we had to look at some pictures and guesstimate what the renovation costs were. And everybody, like, we were in teams, and everybody was trying to figure it out. And the team that thought they won ended up losing, and they ended up like they were going to lose. They underbid the property, and blah blah blah. And it was fun. I had a lot of fun. I learned so much from that, and the exercises that you do at your group. So I do also suggest that people consider starting one of these in their local areas as well, because it's a great way for you to learn more about real estate investing when you're teaching it. And if somebody does not have that experience, maybe they don't own 6 or 7 properties, but maybe they do know someone who does, that's a perfect time for you to collaborate and say, look, I'll do all of the groundwork for you. I'll find a location, things like that. All you have to do is show up as the
Absolutely.
expert.
Absolutely. It's all
Yeah.
about partnerships, teaching people how to create those teams and those joint ventures and those partners. As you know, in the real estate space, it's just, you can't do it. You can do it alone, but it's a lonely process, and you'll only go so far. You'll never get
Yeah.
to your full potential without the right team, joint venture, partnership, support group, whatever it is. So even our leaders, we make sure that they're partnering up so that they can go down this journey together. So super excited about it. It's very rewarding. And like yourself, we hear back from attendees all the time that it's different than any other meetup that they've typically done. And that's by design. We want you to remember it. We want you to get a lot out of it during that period, and take you to the next level in terms of your confidence and your real estate investing journey.
Yeah. I will just disagree with one thing you said. I don't think anybody can do it alone. So I need everybody to put that out of their head, that they can do it alone,
Sure.
because it's impossible. um, so the other thing, as we move into the conversation of the evening about passive income for life through real estate investing, you've said that you have invested in a lot of different types of properties. Um, Walk us through, like, the person today. Let's say that they have $5,000 a month in expenses. You know, they're a spouse, they've got a couple of kids, they've got a mortgage, etc. But they have this dream of being able to have real estate pay for their expenses. Since you've done it, tell everybody, like, what the process is that they need to do in order to get there.
Yeah, I hesitate saying like this is the way, right? Because there's
Uh,
so many ways. Real estate is so amazing, and there's so many ways to get to where you need to go. I can say here's what I did, right? And it's what I put into the book. I started out with the house hacking model and saved up money from my house hacking, right? Get my expenses down to zero, and what I was paying in housing expenses, now instead of spending that, put that into an account and save that as a down payment, right? Because most of us are in fixed income jobs and we're going to get slight raises maybe over the years. But to say you need another $30,000 or $40,000 every year to buy real estate, that's not possible or feasible for most people. Some people are
mhm,
blessed where that's not a problem, right? But most people I talk to is saying that's insane. But getting rid of your housing expenses through what's called house hacking is much more attainable than most people think. And that $2,000 or $3,000 that you were spending on your housing, whether it was rent or mortgage before, you're able to now put that into an account and buy it out, use that as a down payment on a rental property, right? So you snowball, you just keep buying rental properties, set a goal to buy one per year, every single year. And no matter what, you're going to, work harder, get a raise, side hustle, save, house hack, whatever you can do to save up enough to buy a down payment. And no matter what you have at the end of the year, that will dictate where you're going to buy or what type of property you buy. If you only have $20,000, all right, that's a 20% down payment on a $100,000 property. If you have
mhm,
$40,000, that's a 20% down payment on a $200,000 property, right? So don't worry about where or what you're going to buy. Just say, I'm going to save up and I got to buy a property every single year. Like, make that your goal. What typically happens is people go down that path and they buy one property and then two and then 8 and then 20. Like it just snowballs into your ability to buy. Once you become an investor, there's so many other opportunities that open up to you. Like, there's so many partnerships. There's so many people that say, hey, I've been watching you.
mhm.
And I want to do what you're doing. I don't have the time to do that. So can I invest in what you're doing? Can we partner? Can I be
There
the
you go.
money? Can you be the boots on the ground? And they will come to you, right? And
Mhm,
so the reality is it gets easier and easier as you gain that experience. You just need to get in and get that experience. No one ever retires off of one rental property or even two or even three. It's just get there. That is the steps that you need to move yourself forward. Now, that's the cash flow model. There's so many other models out there. There is an equity model, right? So
mhm,
you buy properties that are not cash flowing. I'm not a huge fan of that, but people talk about that right now. um, the risk that I see in that is if you lose your job or if you don't have an income, right? We don't know what we're going to head into the economy over the next couple of years, but I expect that we're going to have some rough times. If you're not able to, one, maintain that mortgage and it's a negative cash flow, then you risk, losing that property, right? So there is a higher risk. I will be it. There's a higher potential reward when you're buying properties that are not in cash flow markets because they tend to appreciate higher. Right.
mhm,
So if your strategy is, I don't need cash flow to retire, I plan to work for the next 20, 30 years. And I want to own a lot of properties that at that point, they'll be worth a lot and I can cash them in, sell them, or refinance them and use that money for retirement. That is one strategy. We talk a lot about the cash flow strategy, not really the equity in your property, but the cash flow that you actually receive every single month. And we call it, you mentioned passive income for life, PIFL, one of my favorite words, made up word. And we threw it in the passive income for life because there's so many passive income strategies out there, even invest in real estate, but they're not passive income for life. So for
mhm,
example, something that we do, we are private money lenders often, where we might lend to someone else, another investor on a project. And that's very passive for us. It's much more passive than if I'm investing in my own project, right? I could be a limited partner on a syndication and someone else for the next 2-3 years is working on that. And that's passive, right? But it's not for life, because all of those projects have a 1, 2, 3, 5 year end date, and we get our money back, hopefully, and we get our return back, hopefully, and it's great. But now I have another job in 2 years or 3 years to figure out what am I going to do with that money, because that money is now not doing anything. It's not earning any income or any interest. And now I got to go find another project, right, to put that money in. So that's passive income, but it's not passive income for life. You setting up rental income with the system, with the property manager, with the maintenance, with the reserves in place, now you can have passive income that you don't need to sell in 3 years or 5 years. You have a 30-year mortgage on it. It's going to go on forever. And if you didn't want to make a decision to, change out that property or swap out that property, you can keep that, in theory forever. So that is a passive income for life strategy.
Yeah. So, shameless plug, if you are a private investor or a private lender and you have funds, we have a couple of projects right now that we are funding. So, definitely reach out to me at SimpliFunded.com with regards to those. But I will also say at SimpliFunded.com, you don't have to worry about going out and chasing new deals as a private lender. We'll bring them to you fully vetted. So,
and that's why I love
there.
operators I love operators like you, because yes, you could always have good deals, ready to go. And like I said, we still do that. My wife, if it were up to her, she would do nothing but the private lending, nothing but the syndication. She loves that side of things, but it is always revetting or making sure you have the partnerships, in place to continue that forward.
Right. So I think that one of the greatest things I've seen with real estate investors is to have a mixture uh, of strategies and properties that you're investing in, just like you would your stock market portfolio, et cetera. So
Yep.
the other interesting thing you said when I first met you was that you did very well during COVID as well, because we've been talking about some of the landlords that have had nightmare situations collecting rent during COVID and things like that. Um, we There may be another COVID type of thing. However, we all know that things happen. How were you still successful during that strenuous time for so many landlords?
Yeah. I mean, number one, I wasn't doing it. It was my property managers and teams. So I
Okay.
made sure I had the right team in place that were trained, that I trust. But it's a business, right? Just like
Mhm.
any other business, you see what's coming, you see the restrictions. If you owned a retail business, you're going to talk to your staff. All right, here's what we're doing to make sure that we're okay, right? So we had these all hands meetings, touching base with all of our property managers to make sure everyone's on the same page of how we wanted to be as landlords.
Mhm.
We wanted to be very proactive. We didn't know what was going to happen, but we wanted to have an open line of communication for our tenants that were concerned. We had tenants in areas that it was very popular. They were hearing from the government or from some sort of agency that you don't need to pay your rent.
Mhm.
We made it very clear that you do need to pay your rent. We expect you to pay your rent. If you can't pay your rent, then here are some services that may be offered, and we can help you apply for those services and or some aid. And so we were very proactive on helping people apply for assistance. We had a very, very low non-payment rate for
Mhm.
people choosing not to pay. We had a few people that did unfortunately lose their income, and we worked with them in terms of putting in a plan or making sure that they had housing until they had their income in place. But it was a couple of people out of a few hundred tenants. So in terms of talking to other landlord investor friends that maybe weren't as proactive, they had a 10, 20, 30% rate of just non-payment, because if they're hearing a message and they're
Mhm.
not proactively being discussed, from from us, they might just assume, like, I guess I'm going to stop paying, right? So that's really, I think, what saved us is we were very proactive in our message. We had a great relationship with our tenants prior, and we basically said, people that choose to not pay during this period, not being able to pay is one thing, but people that choose to not pay at some point, this is all going to end, right? And
Yeah.
you've enjoyed staying here. We've been great landlords to you. If you don't pay for whatever reason, you're not going to stay here at some
Right.
point, right? We're going to make sure that we're going to put in paying tenants. So if you can see beyond these few months, which turned into, a year plus, we want to make sure that we maintain that relationship with you. You're going to be in one of the best, properties in your area. And you're going to, enjoy staying here for many years to come. So most of our tenants chose to proactively be great tenants.
Great. So tell us a little bit more about your analysis of properties and deals. Like, again, my $5,000 a month example. I know you said house hacking and things like that, but how does somebody even begin to learn how to analyze a deal, what to look for, what are the best practices, et cetera?
Yeah, it starts with, to analyze a deal, you got to understand what type of deal you're going to analyze, right? If you're
Hmm.
looking for a house hack, then there's a very specific buy box that you're looking for. You're looking for houses that could fit multiple people in it, whether it's multifamily, whether it's large with 4 or 5 bedrooms, and you can do co-living. If you're looking for a fix and flip, then you're analyzing it completely different, right? You're looking
Hmm.
for margins, you're looking for distress, you're looking for appreciation or ways that you can force appreciation. If you're looking for cash flow, right, then you might look for a turnkey property, and what you're looking at is the numbers more than anything, the price you're buying versus the rent that you're getting. So, and there's 10 other scenarios, right? So depending on your scenario, you will analyze it completely different, right? So you got to start with the end goal in mind. You have
Hmm.
to say, my property that I'm buying, or my goal for my financial freedom in 2 years or 3 years or 5 years or 10 years is this, and these are the types of properties that I need to buy. That has to be first. So
Hmm.
people often come to me and say, I have a property, can you help me analyze it? I usually say, no, I need to know where you're going to go,
Hmm.
because we're going to spend a lot of time. I'm going to teach you how to analyze this. And at the end, I'm going to realize this is not the type of property that you should be buying, right? So
Right.
we have to start with our roadmap of where we're going, work our way backwards. Once we understand that, then it's very simple math, right? It's all about the math. There's usually 2 to 4 numbers in any transaction that you track. You plug into a spreadsheet, you plug into a calculator, and it tells you it's within the range of the math makes sense. And once you understand what that math looks like, you create a spreadsheet. We usually in our classes, we use like a paper, tally there, where we write it down and use our calculators. But that will tell us whether or not it's the return,
Hmm.
and are we okay with that return? Because everyone has a different level of expectations. And so it's not my job to say you should be looking for a 10% return or a 5% or a 20%. It's, here's how you understand what the return is. You decide what's good for you, and that's how you make your offer decision.
Yeah. So, Denise, hello, my dear. You'll be a part of the replay gang. Perfect. Denise is probably working. Mokomami is in the building. Hello, Mokomami. Okay, so I like the fact that you said you start off with the person's goals and what they're trying to achieve, and then you work the deal itself and looking at the numbers. I was speaking with a gentleman this morning, and he was talking about something similar where he's calling himself a real estate financial advisor, and it's all about sitting with the family and figuring out, okay, what are you trying to achieve with a portfolio that you're building, and then backing them into, are we looking at cash on cash returns? Are we looking at appreciation? Then you say, okay, well, based on that, these are the types of properties, these are the types of deals you're going after. And ultimately, you may have to put in 30, 40 offers in order to get one deal. Do you have the time and the what do you call it? Not the gumption, but the consistency, let's
Sure.
just say the consistency in order to do that. So
Absolutely.
yeah.
Yeah,
Um,
no, that's a really good point. It really comes down to, understanding that track. Once you get that
mhm,
track, I've helped people define a track. 5
mhm.
years later, they change their track, right? And that's okay. Okay,
That's
people are
okay.
like so hesitant to narrow in on here's what I'm looking for.
Mhm.
The reality is your road becomes very clear for the next few steps. if you know your path. You can easily pivot at some point, but just say, here's my path until I figure out a new path. And if I never change path, then, this is a 3, 5, 7, 10-year path to, financial freedom if it plays out the way that I want it to.
Yeah. Now, I will say that I knew a woman in Alabama. I still know her. Her name is Maureen, and she grew up in Alabama, but she lives here and she works at the Pentagon. And she would basically find houses, fix them up, put a tenant in them, then go to her Pentagon friends and say, "You can buy this house from me. The tenant is in there. We'll do the property management, et cetera, et cetera." She would sell two, keep one, sell two, keep one. That was her plan. That's all she did. Last time I spoke to her a couple of years ago, she had a $2 million portfolio
I love
herself
it. I love it.
from that
Yeah.
one thing. So you can create a business out of this as well, where you have some active income coming in and then some passive income. Now, she was a little bit different because her friend and partner lived in Alabama and he was a licensed GC. So he took care of the construction crew and all of that. She took care of finding the money up here in order to buy the properties and the property management. It just so happened to work well for them. But I
Sounds
think
like a
that
perfect partnership.
oh, yeah, definitely. I was a little jealous of them, just a little bit.
Sure.
But I met another young lady who is at Microsoft, and she's in the Microsoft sales team here in the Metro DC area as well. And there's another gentleman that works in her company um, who has ties to Ohio or someplace like that, and he's doing the same thing in Ohio now. All of the people that work in his department in Microsoft are saying, okay, we're going to go and invest in real estate in Ohio. So I think it is a matter of figuring out what your plan is and finding the people that can help you, like you said, reach those goals. I also, and you can tell me what you think about this, I also am a fan of people knowing where they're investing, because let's say for me, I don't have any ties to Milwaukee. But if one day I get up and I say, I want to invest in Milwaukee, well, I don't know anybody there. I don't know the real estate. I don't know the neighborhoods, et cetera, et cetera. How do you counsel people with regards to, let's say they live in California, New York, or someplace super expensive, but they still want to invest? How do you counsel them with regards to long distance investing?
Sure. Yeah, that's a great question. And that's something I had to learn at a young age. I was in Hawaii, investing
Mhm.
in Hawaii, got priced out of Hawaii at a very early stage in my investing career and and when you live in Hawaii, it's Hawaii and everyone else. Like the
Mhm.
mainland is just like, I didn't know the difference between Texas and Florida and California investment wise, right? I had no ties to any of them.
Mhm.
And so through trial and error figured out some processes. What I usually tell people is, if you take a dart, you throw it at the map,
Mhm.
and no matter where you hit, within a 2-hour radius, you can find somewhere that you can invest. Now,
I've
you
heard
may
that.
need to change your strategy, right? You might
Mhm.
not be able to use the same strategy, but you can make it work, right? And if you threw the dart twice, and if you have a
Mhm.
personal connection to one of those, then it makes sense to go to where you have a personal connection, just because that relationship or that personal connection is going to be easier for you to build the team or the relationships you need. So
Mhm.
whether you know it personally or you know someone there, that does give you a comfort level of building a team. Now, some people don't need that at all, because they're saying, I know, starting from scratch, I know how to find my agent, how to find my property manager, how to find my lender. I'm just going to hit the books and talk to a lot of people until I connect with and find the team I'm comfortable with. Most people want some sort of starting point. And so a
Mhm.
starting point is your connection, whether you know it or whether you know someone there. Um, in terms of the investment strategy, I prefer not investing near me whenever possible, because I'm a very hands-on person, and I'm not the best person to do any of the jobs. I know that. I'm not the best person to be the property manager. I'm not the best person to be the contractor, but I'll try to do it all. And if it's close enough, I'm like, maybe I'm going to go do this. And it turns out being the most subpar investment possible, right? So
That's
uh,
interesting because
the
everybody else I know is like, no, I want to pop in and see the successful investors I know. I want to pop in and see my investment, see if the guys are sitting there not doing anything. They're
Yeah,
supposed to be
no,
putting the vanity in.
I completely get that, but there's ways to do that without actually popping in, right? There's
Uh-huh.
systems that you can put in place as
Hmm.
checks and balances to do that. So I needed to get good at creating those systems, because if it's near me within like an hour and I don't put those systems in place because it's drivable for me, like the reality is me checking up every once in a while is not as much as a system I put in place for something completely remote, or
Hmm.
someone's regularly checking up for me, sending me videos, and I'm not that active as the people that I hire to check up remotely for me. So the reality is, although I feel like it's going to be easier when it's closer to me, it usually is much more work on my part and doesn't go as well, just because I'm a softie. I typically, I'm not the one that's going to be, throwing the hammer down and making sure that everyone gets back to work. I'd rather hire somebody for that, and that's where you're working remotely. You can do that, hire the right people. Now you might not hire the right person, and you have to fire somebody. You have to bring someone else on until you find the right team. But once you find that team, then it makes it easy for you to rinse and repeat multiple times.
I want to say hello to Rana and hello to Erica as well. Welcome to everybody. And yes, everybody, please like the video, share, especially with anybody you know who wants to get into real estate investing. My shameless plug here is if you're looking for funding for your deals, come to me, SimpliFunded.com. We can get those funded for you nationwide. Also, Amnai is here and he has a book, which I'm going to have him talk about. He has a group of real estate investors that meet. He's got 19 of those groups. He's looking to have 50 of them. So if you want to start one of the groups under him, then definitely do it. But those are across the nation as well. So why don't you tell everybody about your book, about your real estate investment group, anything else you have going on?
Yeah, I appreciate that. Yeah, Cash Flow Breakfast Club is the name of the book. It's
Mhm.
on Amazon. It's ebook or print book and Audible as well. I wrote it, let's say 4 or 5 years ago, maybe, and it became a manual for me as a training manual. I started to coach and train agents. I started to coach and train investors. And really all I knew was what my process was, right? So I went back through every transaction that I had up to that point and just learned like the lessons. I made a lot of mistakes and I succeeded sometimes, and those are usually the best lessons. So that became my training manual, and I kind of put it in a book format, like a very like textbook, almost like here's an instruction manual. Never published it. And one, because it was a terrible, book. It was very boring. It was just a how-to manual. And it wasn't until a couple years ago, my wife really pushed me to like, all right, you already wrote that. Let's put this into a book that we'd be proud to publish and put out there. So she helped me put the story behind it, really pulled a lot from my personal journey. It's about a guy that grew up in Hawaii, that was an investor, became an agent, made a lot of mistakes, and found this club, this Cash Flow Breakfast Club, which is the community that helped him kind of get to the next level. And so really through you vicariously, you can live through his experience or multiple people in that story of going from rock bottom or even below rock bottom for some of the characters to, realizing that your first step is not that hard. Your first step is going to be work, but it's not that hard. And as long as you know what your first step is, then you can figure out your second step and go from there. So that's been my training manual, and it's been a great book. Our group is called the Cash Flow Breakfast Club, which is the same name there. And really, we believe in people. I think you should sprint through financial freedom. Like that's my. You should
Interesting.
sprint to financial freedom. Do not take your whole life to get to financial freedom. Sprint to it, because like your journey begins at financial freedom. That's what I believe. I believe your journey really begins at financial freedom. Up until financial freedom, you are obligated to someone else. You are obligated to
Sure.
not live your life and your journey the way you want to, right? You have financial shackles, obligations, time shackles, time restraints for good cause, right? You're taking care
Mhm.
of your family, you're taking care of your obligations, but it's not what you would be doing. It is not your gift to the world. And so once you hit financial freedom, you get to decide, what's my gift to the world? What am I going to do to impact my family, impact my community, impact the world in general? So one of the exercises we typically do, and I think you sat through one of these, is like everyone in here is meant to change the world somehow.
Mhm.
Most people will never have a clue as to what that is until they hit financial freedom. And it sounds sad because most people will never hit financial freedom. But you get to financial freedom. Real estate is one of the many ways that you can do that. Then you can sit back and say, what's next? Like, what
Right.
am I going to do? What's my purpose? And you might find your real joy. You might like make the impact that you always dreamed you might be able to do. So it's really not about money. It's really even not about real estate. It's about a community of people who believe they have something bigger to give. And the way to get to that is financial freedom so that they can
Mhm.
start that next journey in their life. So it's been rewarding. We teach people the very basics about real estate. We go from basics to intermediate to very, very high level on every scale. But we always tie it back to like, you're going to go change the world someday, right? What are you going to do? Like every single month we talk about what are you going to do to change the world? And, sometimes people come in and they've never thought about that in their life. By second, third, fourth time, they come up, they get excited. Like, I know what I'm going to do. Right. So they have a fire that maybe they haven't had a fire to, motivate them to even think about financial freedom up until that point. But once you realize what your purpose is, then you now have the motivation to maybe make that sacrifice or work a little bit harder or push through consistency until you can actually achieve your goals through real estate investing.
Yeah, yeah. It's I've spoken to people who have done it the other way, where they start off with a nonprofit and they don't have their financial stability. And I'm like, no, you got to put the oxygen mask on yourself first, and then you are better able to serve the community and serve the world.
Absolutely.
My final question for you, because again, you said you've done so many different types of deals, is what's your favorite type of real estate investment to actually like analyze and do the deal and get the dividends or get the payoff?
Sure. I like hard stuff. I like complicated things. So, boring, simple rental properties, although that's probably what I'm most successful at. I love the
Mhm.
things that I need to think through and like, really multiple layers. So I picked up a strategy a few years ago that I call the portfolio Burr. And I think I'm the
Mhm.
only one that actually does this on a regular basis. But basically, we buy entire portfolios from mom and pop landlords. So
Okay.
someone looking to retire, right, that has 10 properties or more, 10, 20, 30 properties. If they want to like retire, they're just done. Let's say they were self-managing and
Mhm.
it's overwhelming for them to kind of turn over to somebody. If they were to sell those off one-on-one, it would take them 2-3 years. It's
Mhm.
very difficult to sell properties when they're rented. And so what we do is we agree to buy them all, rented, any condition. And so we get the portfolio purchase. They agree that there's we get a certain level of discount because we're saving them years in the
Time.
process.
Mhm.
And then we basically go through and we optimize those portfolios. The ones that are vacant, we fix up, we refinance, we pull out our money, we do the Burr strategy on that. We put
Mhm.
a good tenant in there. Some properties, maybe they weren't properties that we wanted to buy, but we agreed to buy them all. So we bought it, and then we're going to fix it up and sell it, and we'll flip it, and we'll hopefully get our money back, maybe make a profit on that. We try to keep mostly multifamily. Small to mid-sized multifamily is our bread and butter. At the end of the day, we bought, let's just say 10 properties. We kept, 7 or 8 of them. And over a year period, we've hopefully renovated the majority of them, at least the ones that turned over because people moved out or they were vacant.
Mhm.
And then we will, upgrade the rest once the tenants move out. We raise the value by doing that. And then eventually we're going to utilize the bank to refinance and get the majority, if not all of our capital back. And then we do that again. And so we do what's called the Burr strategy, which most people understand and know, but we do it on a portfolio level of 10 or more properties.
That is great. So, shameless plug again, we do have a portfolio bridge loan for people. So, if you've come across a portfolio, definitely contact us. A lot of people in those situations have deferred maintenance. Some of them even don't owe anything on these properties. So you're able to get them for a really great price, built in equity, all of those things. So, but guess what? That comes from what? Shaking the trees
Yep.
and finding, talking to people, and all of a sudden these big opportunities come. Because I heard somebody say in real estate, like, if you're thinking about baseball, you're often going to hit singles, but every once in a while you get the home run. But you got to be in the game for that to happen. A lot of people sitting on the sidelines waiting for the home run when it's really, they're hitting singles
Absolutely.
every week in order to get that home run. So I love that. I love the portfolio idea. We've talked on this channel about the $68 trillion wealth transfer that is coming. We've said that it's going to be property, stocks, businesses. Some of them will be real estate businesses for sale, wholesaling businesses for sale, like with people who have like brand recognition and things like that. So there's going to be just a lot of opportunity out there. And there's a lot of funding money as well. The SBA, you all know, have started doing some things to help people who want to buy businesses, buy them without as much cash out of pocket. They're recognizing that this trend is coming, and we've got just a lot of money out there that is. So don't let the money, is what I'm trying to say. Don't let the money stop you. Lock down the deal, and there are outlets for you to get the money that you're looking for.
It's
So
going to be an exciting time. I mean, obviously, we're going to go through some hurt, but you're exactly right. Be a buyer, whether you're a buyer in real estate, buying in business. Man, I've been consuming a lot of Cody Sanchez lately. I don't know if
yes.
you've seen her, but she's like that. She's a beast of buying and owning and optimizing businesses. And you're going to have, just like tired landlords, tired operators, where there's so much potential, but they just don't have the energy to do that, right? And they want out. They want to be paid for what they built up into this point, even though it's not where it could go. But they're not going to take that ride. And if you can do that, it's often much easier to buy a business from somebody if you're willing to put in the sweat equity and or put in the team and or capital. There's going to be a lot of potential there. So just like building your real estate portfolio, building your business portfolio, I'm absolutely obsessed with analyzing businesses as well. And that's a whole nother topic we can discuss.
Absolutely. Absolutely. So, well, I want to thank you for being here tonight, sharing your wisdom with us. Hope everybody at least, get the book, Cash Flow Breakfast Club. Check out the website. Go see if there's a meeting in your location. If there's not, and you want to start one of their groups, it's for free now for you to start one of their groups. And that way you can be a leader in your local community with regards to getting real estate investors together. If you don't know anything about real estate, find somebody who does know a lot about real estate and say, look, I'll do all the grunt work. All you have to do is come and talk to people once a month and share your stories of how you're doing your real estate business. But that gets you in the game with regards to getting to know people. So you're asking, can I please pin in the chat? What am I pinning in the chat? I guess you're asking me to pin the website. Let me get it really here.
Cashflowbreakfastclub.com.
Give me a second, Rana. You're saying I'm not on my game, huh? There you go, Rana. And anybody else, you are able to get the link there. So cashflowbreakfastclub.com.
Love it.
All right, ladies and gentlemen, whomever's here on my male side, thank you so much for being here. I want to thank my guests again for being here. Amnai, definitely get his book. Definitely think about sitting down with somebody and saying, you know what? I need to really come up with a plan in order to get passive income for life. What is going to be my real estate plan? And sitting down with somebody who can actually help you outline that, draw that out. Omni may be able to help you. If not, you can reach out to me. Y'all know how to get in touch with me. Just look in the description box. And if Omni is not available, I have a couple of other people who do that as well. And they don't charge you for it. They'll just sit down with you for 30 minutes and kind of help you map out a plan. So, all right, everybody. Thank you so much. Have a wonderful day. And I'll see you all in the next video. Take care.
Thanks, guys.
Bye-bye.